Yeah, go ahead.
Hi. Thank you, everyone. Those were wonderful presentations. I have a question for Paolina related to, like, I want to know who are those people that are getting into this app? Because there are other options in which you don't have to wait 5 months to get into a similar kind of like app. So is there something different about this particular app compared to others, or it is something about that people that are waiting those 5 months? Because there are a couple of ones I can think about, the Stash, that give you something similar. But obviously their services is a $1 fee per month. So I'm really interested about who are those that are actually in those.
Yeah, no, that is an excellent question. In the paper, we do a detailed description of who these participants are. Just to summarize, as with many fintech users, these guys are more likely to be men. They are more likely to be young. But they do have spending patterns that map fairly well to the consumer expenditure survey in the US. This is actually something we were just talking about last night, no? That this fact that they are predominantly male, that is the case in most of the fintech data I have worked with, that I guess makes Simon's work all that more relevant, no? Because this gender gap in access to mobile, just to mobile phones, it's even very, very true as well in terms of access, use of these fintech platforms. But overall, I would say more likely to be men, slightly younger, but with spending patterns that map very well to the average Americans. They are across the income spectrum of the income distribution.
Hi, great presentations. My question is for Dimuthu. So I was curious, of the folks, the invisible primes that were able to access or have greater financial health through this, do you have a bit more around kind of who were those folks, who were those invisible primes? You mentioned in the beginning of your presentation that folks that might be students or, you know, of different backgrounds are more likely to not have access to credit and things like that. And so just curious about what you found amongst those who were able to expand their financial health.
Right. So they tend, like primarily the group that we see these effects are the ones who have low credit scores. So these are the ones who don't have access to other channels. And within this, like, so these individuals are, they tend to have like shorter credit histories. So it's kind of like people like who just graduated, who just immigrated to the US, so don't have a large credit histories. And also they have a lot of like higher outstanding debts. So this is primarily credit card debt. So most of these people are obtaining these loans, low interest rate loans, to repay their existing credit card debt. So these are the ones who see huge improvements in their financial health in the future.
This is a question on the last one, and sorry if I read the graph wrong, but one thing that sort of struck me when you kind of had that heat map of the like the traditional credit score and then the sort of alternative score and then the actual repayment, it's like those folks that were kind of had the worst traditional credit score actually seem to have better repayment like across the distribution, and that the you like even when the alternative algorithm predicted they wouldn't do so well, they actually repaid pretty well. And in fact, in the other corner, like it looked like that was sort of where the worst repayment was. And so that kind of got me like thinking a little bit about selection into the platform, you know, like the nature of that selection, and then, you know, like what implications for maybe how you would think about doing this kind of, you know, credit scoring, insofar as like the value and type of the model might change quite a lot depending on who's selecting it in the first place.
Right. So you're exactly right. The ones like that, the individuals that you're talking about, like who have like 700 credit scores, then who are able to get credit from the platform, even when the platform is estimating close to 50% default probability. So they're charged a very high interest rate. So why are you coming to this platform? If you have a 700 credit score, you could have easily gone to a traditional lender and received a loan. So maybe like there is adverse selection, and or maybe they're in a hurry. So I agree, like there is some adverse selection going on in that part of the credit score distribution. So you see a lot of these high credit score individuals who are coming to the platform even when the platform is charging a very high interest rate. So these individuals are of lower quality. Yes.
Yeah, thank you, Dimuthu. I also have a question for you. Like, I wonder if the data can contain some international data or information, because I noticed that you mentioned immigrants. Maybe some immigrants, they have higher credit score or higher like trust in valued by other countries, but they lost this channel. So is it possible that international evaluation system be built to enable these people? I'm not sure.
Yeah, in our setting, right? So what they're using is whatever so mostly the information that they have available. But certainly so if you immigrated to US, you're 40-year-old and you had other loans in other countries, that information will certainly be useful. So I guess what these platforms are trying to do is to use the other sources of information, to sort of get a better signal of your credit quality, even though you don't have access to this kind of data. I know some other emerging markets, you look there are papers that look at the payment history, your checking account history, that can give you a better sense of what your default risk is by looking at your rent payment, whether you're paying rent on time, whether you're paying your utility bills on time. So they're trying to sort of extract a signal by looking at these alternative sources of data because they don't have access to those type of other information.
Thank you for all the talks. This has been really interesting. My question is on the BNPL side. I'm curious, you saw that there are 2% of credit card transactions constitute BNPL paid loans. And I'm curious to understand, did you see those loans as being paid late, or was there any interest being paid on any of the BNPL loans? And so is there any sort of savings or benefits that you're seeing from an economic standpoint from putting the BNPL on the credit cards themselves?
Yeah, so we don't see, unfortunately, in our data, it's just a credit card transaction, so we don't see the interest or on the credit card side or on the BNPL side. So, but the best that we can do is the types of consumers where we see this most are younger consumers and consumers in most deprived areas, who are the types of consumers who are most likely to only pay the minimum and incur interest on their credit card. So inconclusive, but suggestive of these are the types of people who you might be worried about having that kind of behavior. Thanks.
Can I step in? And I have some additional information I would like to get from you about BNPL. So from the point of view of the person offering BNPL to its consumers, you told us that basically they get consumers to spend more, and the cost seems to be that they are not, if they are buying directly from a store, then I suppose they, instead of paying a fee to the Visa company, they pay the fee to the BNPL. So and that's enough to make this thing zero interest and all that?
Yeah.
Because I was wondering, I know that credit card, for instance, they do make a lot of money from people who don't pay on time. Yeah, that's where they make the most money.
Yeah, no, it's definitely a different model. So they there are some BNPL firms who charge late fees, but many BNPL firms don't charge late fees, so they don't kind of punish people for missing a payment. And yeah, the key kind of selling point of these is that they're interest free, but they're able to charge enough from merchants to make it worthwhile.
But then how does it work? How does it work with credit card firms? Why would credit card firms offer that to their customers? Is because they think that these products are going to attract consumers who are looking for a commitment device?
Yeah, I think we don't know yet. I mean, the BNPL products offered by credit card lenders are very new, and I haven't seen any research on that yet. Personally, I think it's because some people like being able to commit to repay their debt. So there's a old paper by Prelec and Lowenstein kind of talking about this pain of paying and why some people might want to commit to repay particular things. So the example is if you go on holiday you really hate paying for a holiday after you've had all the fun of the holiday. But like, so for those kind of things, you don't want to kind of keep paying for it. You just want to pay off as soon as you get home or before. Whereas there's other things like a sofa that every day you get home, you sit on your sofa. It's much less painful to keep paying for your sofa over a few years because you're sitting down on it. So you're like, oh, it's painful, but it's kind of, well, not that painful. It's like cushioning my bum. So it's all right. Yeah.
We have 1 more minute. I have a question for Paolina. Just how much money did they accumulate, these people? So they are distorting their consumption to, you know, because how much money do they actually, I mean, what's the value of these shares that they accumulate?
Oh, very little. They were receiving only $1 per week. So
yeah, I saw that. But did they build up some kind of portfolio?
Yeah, yes, but we're talking about a few dollars, right? So because it's on average, right, that they're getting this amount, so it doesn't just add up, no, over the weeks for every individual. But yeah, no, we're talking about very little money, and that's what makes us think that this is kind of like a powerful reward, if you want, no? That makes us think that there is something more than just the price effect or the wealth effect that may come from this accumulation.
All right. I think that's all we have time for. Thank you very much.